All right, we are back. Mr. Matt Williams, Luxor, it's been 2 years. What has been happening? Obviously, you didn't show up to record with Justin. He's really butthurt this
Yeah.
summer in the Ozarks, but you're busy building the energy business of Luxor. What have we missed? What have we missed in the last 2 years? Shaved all your hair off. Maybe that's a sign of either aging or stress. I don't know. Maybe both.
It's hash price, dude.
What's
Oh,
going on in the world of Luxor?
oh, there's so many things to unpack here. One, yes, Justin, I owe you an apology. I would have loved to come sit on a dock and do a podcast and fish with you. It sounds amazing. We will make that happen.
We will. We will. I'm
To
looking
answer your
forward to it.
question, Jake. Yeah, for sure. To answer your question, Jake, yeah, like the reason I wasn't able to do that was we were just so busy this summer working on our energy launch, which was like we were doing it in stealth mode pretty much all summer. So that's definitely one thing. And yes, I have aged and I'm incredibly stressed out. The haircut was just one of those things, man. It's been a while. Needed to make a change. Now I just look like Joe Blow asshole in Bitcoin mining.
Oh man.
So talk to us about the energy side. What are you guys building?
Yeah. So, when I first joined Luxor almost 4 years ago now, part of the thesis that we had talked about was, Luxor wants to be a one-stop shop. It's hard to bring on and build the hash rate markets. But even like in the early days when I joined, I was like, energy should be a piece of this too. So it was always part of the roadmap. We wanted to wait until we had some success with the hash rate markets, and we felt like we were in a good place going into early this year. So, in January of 2025, we basically put together a business strategy, pitched it to the executive team at Luxor, and got buy-in. And we're like, all right, let's start in ERCOT. Texas seems like the best place to start. It's where most of the miners are, and it's a great place to launch a business. So hired a guy named Haley Thompson. I think may or may not have been on your show before, to kind of help me with the strategy. And really the strategy is, start with a rep in ERCOT and figure out a way to like incorporate that with hash rate derivatives and the mining pool and the firmware that we own, and just have it be more like an ecosystem play. So when miners come to Luxor, they can say, hey, we need energy, we need machines, we need firmware, or we need derivatives. Now you can do all that, and it's all like just a big ecosystem play. So that was really like kind of the thesis behind it. What we offer now in terms of energy is, it's a standard rep. So we're a retail electricity provider in ERCOT, and then we're actually going to expand into other ISOs as well in 2026. But we don't want to just be like a boring, here's your adder and like we'll get you set up in ERCOT. We have differentiators, so it's all integrated with the pool. We're going to offer the ability for miners the ones that are on our pool to basically net their mining rewards against their power bill and have that all automatically paid. That's in the works. We're actually doing it in some respects for some customers. It's a bit manual right now, and we're working on the automation piece. And then taking BTC as collateral instead of USD. So like basically everything is designed to provide capital efficiencies to miners, reduce their deposit requirements, make payment automated and easy. I think that's what our right to win in this space is. So like we've been building all that. We launched at NABS in October. But even before that, we have our own self-mining site. So we had been testing all this stuff on our own, eating our own dog food, as they say. And launch went great in October, and we've just been like, we haven't even like been pushing hard on the sales. It's all been inbound. Like our whole pipeline is inbound really right now, which has been amazing.
Yeah, I was going to ask you. That was going to be my question. Is like, how has it taken off? I can tell you, the group I do work with, Emory, like they're obviously going to move over to you guys. And I've had this discussion with other reps. It's basically, I don't know how you guys are going to compete because of your guys' knowledge of the mining space and how you can kind of design products or just services or ways to handle your power contract different than basically everyone else out there. And so have you guys just seen it kind of taken off? And I'll follow up with that, but how's it going from the day you guys announced it to now? What's the inbound been like?
Yeah, the inbound's been great. We've actually kind of like tried to temper some of the inbound because, we are a new rep, but,
Mm,
we didn't have a rep prior to this, and this is a new business line for Luxor. So we want to make sure like we're doing everything right. So, the first step is talking to miners that are already working with us or friendly with us. And the advantage for those people that come on first is they can help with design, make this purpose built for their own
mm,
requirements. So right off the bat, when we were talking to people on these inbounds, it's like, what's important to you? And really what's most important to people is, obviously a low adder's important, but how do I reduce my deposit to as close to zero as possible?
right.
How do I have like efficiencies in payment, that kind of thing? And, Bitcoin miners are into Bitcoin. So how do I leverage the Bitcoin that I have on balance sheet? And so it was really, like we had a lot of the functionality already just through the derivatives business or through the pool. It was just kind of like merging everything together.
Mm,
And so, as I said, like I think we're trending towards maybe 50 megawatts by the end of the year under management. But the pipeline itself is like well over a gig going into
jeez.
2026. And that we're setting ambitious targets, but we want to be at a gig by the end of next year.
Wow. Yeah, that's pretty ambitious. But do you feel like it's more small to mid-sized players, or are there some of the big boys like coming to the table?
It's both. Yeah.
Yeah.
Like I think it makes more sense to start with the small to mid tier people because, it's just easier to get feedback. It's easier to iterate. It's easier for them to like kind of be part of the build process. And like, meanwhile, in the background, we're building all this institutional grade capabilities as well.
Mm,
And we're already having conversations with publicly traded mining companies. And so, like it's weird, like our pipeline of projects is anywhere from a couple of megawatts to hundreds of megawatts.
yeah.
So, like on a site by site basis. So,
Hmm.
just thinking through it, it's super exciting because you're like, how do I plan for this 10 megawatt site? And then the same day you're talking about a, 2, 3, 400 megawatt site. It's been super fun.
Yeah. 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 I have had conversations with other suppliers because our contract was coming up, and I told you this when we were talking privately, but I've told them, I've basically been like, you guys are not gonna be able to compete with them. Like, there's just not gonna be a way for you to, from a miner's perspective. You're talking to other miners on the rep side now, which is a big difference. So I'm excited because you guys are able to basically bring a knowledge and experience to that side, which honestly, even though it's mining's such a big deal in Texas, a lot of them, when you talk to them, they still don't understand the business side of it.
Yeah.
And so, having a counterparty on the rep side, which is obviously probably the most impactful part of your business as a miner, is really, really advantageous. So I was super excited to see you guys hopping into it, man, and I'm excited to work with y'all. So good job, Luxor.
No, I appreciate it. It's been a team effort, but it's been super fun. Like, what I like about working at Luxor is, everyone's super willing to go talk to customers. So we have a good reputation. Like even before I joined, like feel like Luxor's the good guys, but I think we're good guys because we'll go talk to the miners and figure out what the pain points
Mm,
are and try and build around that. And obviously like, we're trying to make money on that as well. But like, I think where we succeed is our execution, listening to what the pain points are and trying to come up with creative solutions for it. And
yeah.
energy is just a step.
All right,
How
dude.
has obviously the elephant in the room of, the AI boom, we're seeing just kind of massive diversification of miners, into AI, some heavier than others. Some are just kind of sort of pivoting.
Yep.
Some are just kind of dabbling and doing both. Some are want to say pure play kind of Bitcoin miners. I mean, you guys are so plugged in. You have your finger on the pulse of kind of what's happening in the inner workings and stuff. What are you seeing out there?
I mean, just strictly in terms of like AI adoption or pivot. I
Yeah,
mean,
and then tying it back to just like how has it affected y'all's business and how you think about things. I mean, traditionally being hyper focused in the Bitcoin mining space, I mean, are you guys playing that game as well and kind of getting into that space, or
And I
yeah,
want to
just
have
kind
a
of
yeah.
m-
I'm
yeah,
gonna have a follow up to that.
macro diversification, but how does it affect Luxor's business?
Right.
Yeah, I mean, I wouldn't say there's an immediate impact on it. Obviously, it's top of mind for us for multiple reasons. Like the first reason you already touched on is a lot of our large scale customers are either fully pivoting or diversifying into, AI HPC. Um, for us, it's like it has long-term implications. In the short term, a lot of these pivot, if they're full pivots, you're still looking at a couple of years before that's complete. And so, it's not an immediate impact, but that has implications on the pool, that have implications on our firmware business, the derivatives business, everything. Um, and then I think because of that, plus other factors, you're seeing network hash rate growth, the growth itself slow and will probably plateau pretty soon. So that has implications as well. I think there are ways that we're capitalizing on this. One, like we can help facilitate miners transition through the derivatives business. So like we can help miners with hash rate get financing for that hash rate, have them sell it forward and then use those funds to transition to HPC. We're doing that quite a bit. But as a strategy for the organization, we're starting to figure out like where we can play in that space too. And I think, one area is obviously energy. We're going to start with
Right.
flexible load. Just because like that's what our network is. But I think once we build up that business, and maybe take on some capital partnerships on that, we can get into AI, or any data center for that matter. That's really like the longer term play, but it's probably still a couple of years down the road. But yeah, I don't know. It's interesting times, Jake. Like there's a lot of factors in North American Bitcoin mining come into play. Like just the pure demand for energy from AI is going to squeeze out mining, in my opinion, from North America. Plus, you got a rising energy cost and hash price at near all-time lows. Like all those are, that's a lot of headwinds for the mining world.
Right. But dude, okay, I'm glad you said that because that was kind of tied to what I was wanting to ask, which is, do you think we're going to see, you mentioned a plateau, but I think over the next 5 years, like if AI continues on the trajectory that it is, I think we probably see a decline in hash rate in the US, and that move to places where the AI kind of infrastructure is just not there, from the investment level. Like obviously the US is a big place where people want to deploy AI technology and growth and build the big massive sites and eat up all the power. And like, I know we do a great job of like coming up with innovative ways to generate new electricity and kind of meet these demands, but uh, the demand is quickly outpacing the ability for the infrastructure to keep up. And so do you think over the next 5 years, would you agree, or have you guys talked about like what the hash rate is going to do in the US and then what that kind of does to the market overall? Because there's a lot of other factors that come into play when you move things international. I was kind of talking to you about some of the things I'm working on, but some of the international stuff, there's carries with it a lot of geopolitical risk. And so well, it could get like right now it's ugly mining. Hash price
Yeah.
sucks. Hence the haircuts. Uh, but I can see a time where these small and medium sized groups, like we got to go through this bad time, but down the road when a lot of these big players, the riots, the bit farms, all them are no longer mining Bitcoin or no longer mining it, at the scale that they are, I do think it's going to be a piece of all the AI HPC stuff in Texas in particular. I think there's going to be some aspect of Bitcoin mining that stays there, but a big percentage of it will be gone. Do you think the small medium guys are going to find like an opportunity to thrive here after 4 or 5 years when some of that has come offline, or what do you guys see that happening to the hash rate?
Well, to address the first part of your question, like
Yeah,
I
it was
think if
long, wasn't
you
it? My bad.
no, no, it's good. It's good. If you make the assumption that the demand for AI HPC continues at the level it is, I don't know if that's a safe assumption or not.
Right.
There's something to
True.
talk about. But if you do make that assumption, and you also make the assumption that energy prices remain somewhat high and hash price remains low, like you'll have to see a migration out of North America because it's just there's not enough to go around, and if there's a supply demand issue, it's naturally the supply is going to go to the higher margin business. And right now that's AI HPC. So yeah, I mean, it's just logical sense. Now, if, energy prices come back in and maybe, the demand for AI HPC isn't what everyone thought it was, and then Bitcoin rallies and mining becomes more economical, you might see a shift. And I think the answer is probably somewhere in the middle. Like, I think you will see some migration out of North America to areas that have sub 4 cent, sub 3 cent power. And I think that's just logical. And I also think if you're seeing the large players like, the riots and the bit farms and the core scientifics transition fully into AI HPC, then, network hash rate in North America is going to have to be like the mid-tier miners, like the 10, 50, 100 megawatt miners, and maybe those grow. And the last part of your question is, does it benefit them? It benefits them if a bunch of hash rate across the network comes off, right? Because then, difficulty becomes better and Bitcoin denominated hash price is better. But like these are all assumptions that are hard to make.
Right. Yeah, they are. And it changes so fast. Everything changes so fast right now. I mean, Jake and I were talking about, and George McHale, buddy of mine over at Emory, just even the quality of AI right now, like the quality of ChatGPT from a year ago, dude, even like 6 months ago to now is, I mean, it's dramatically better. Like there are some industries that I'm completely buying into. It's going to change industries. The legal industry is one of them. Like billings are going to have to change really, really quickly and in a different way, like flat fee type stuff, things like that. Getting rid of basically the hourly model, but like it's getting so good in some regards, and so some industries are going to see it. I agree. I don't know. I don't think that the demand that people show on paper for AI, I don't think it's feasible, right? I don't think
it is either. And like, I don't
Yeah.
know that the business model is fully refined yet. I think for some people it's easy to make money, and for others it's going to be extremely difficult to monetize that. So
if you listen to Sam Altman and some of the other guys talk about it, this argument kind of goes a few different ways. It's like, well, if you truly believe in AI, let's frame it in the context of like the climate change issue, which is totally done a 180, right?
Yep.
If you truly believe that we are going to build artificial general intelligence and reach that in the next few years, and it's a zero-sum race for the companies, the AI companies who are building large language models, and it's a little bit of a geopolitical race, say, between us and China, they can very easily ignore everything they've been preaching for the last like 15 years or however long it's been with the ESG wave in the name of bringing it on compute. Because if AGI does what we believe it will do, then it will have the intelligence to solve all of those problems anyways, assuming that they were problems, right?
I think that's wishful thinking, but yeah, that sounds great.
Yeah. And Sam Altman says the same thing about their business model. Whenever he gets pushback, he doesn't have the best temperament whenever he gets these kind of questions. He famously just exits podcast.
I'm going to do that these days.
Yeah, just
I don't like your question, and I don't like the answer I'm going to have to give. So I'm
question I'm on here.
But he was just there. People ask him like, "What's the business model? Like, how do you support this? How do you support this massive, like the biggest infrastructure build out in modern history ever?" And he's like, "Oh well, we'll just ask ChatGPT to help us come up with like new business ideas." And it's like,
that's fantastic.
And I mean, I'm saying, I guess, we did a whole episode on this, probably like a month ago. I think the reality lies somewhere in between. I think the feasibility thing, who knows? But in terms of, is it a boom or is it a bubble? I think the truth lies, kind of somewhere in between. I think that all will be revealed over the next really few years. Do we actually hit AGI or not? Everybody's saying 2027. Yeah, it can be both.
It can be a bubble from right. You can be a bubble from the sense that there's going to be a lot of companies go bust that are not capable of doing what people thought they were going to do or what they said they were going to do. But the gains.
The one thing for sure is that there's demand for energy.
Right.
That's
why your guys' rep business is going to kill it.
Yeah, I mean that's a fact. Like that's not going away anytime soon. I would be a little bit concerned about grid infrastructure across North America and beyond, but the demand is 100% there.
Right.
You know who's rolling in it right now? Generator salesmen. Those guys, nobody cared about them a few years ago.
Yeah.
And now these dudes are they all got new
Slinging.
Raptors. They're just living the life.
Dude, them, people building transformers, the IPPs, like there's a windfall happening right now.
Yeah. I always find a way to like miss the windfall, but
it's not too late, man.
It's not. I hope not.
I think one thing that we are going to see, and I listen to like the All In podcast a lot. They talk about kind of the resurgence of like American manufacturing, and I think especially with AI and robotics, I think we are going to see like a renaissance of large scale American manufacturing being brought back here. And I think it's needed, especially just in the context of power alone. Whenever we are going out and looking for nat gas recips or turbines, one of our questions is it's typically they don't have anything, right? So it's about lead times, but it's also what's your manufacturing capabilities, right?
Yeah.
And so how many megawatts can you build per month, which is also obviously going to factor into kind of future lead times as well. And you're just seeing massive, massive, massive backlogs of years for some of these manufacturers, the ones that everybody knows, right? The Caterpillars, the Rolls-Royce, Everlands, Jenbacher, GE Vernova, the list kind of just goes on and on and on and on.
Well, you can't just spin up a manufacturing company,
right?
Yeah. It's difficult. It's extremely difficult.
That's right.
That's probably the only. That's probably the only area Luxor's not in right now is manufacturing, right? You guys feel like you're touching a piece of everything right now. It's great. But I think that's probably the only area I haven't seen you guys move into yet. When's that going to happen?
Manufacturing of what specifically?
Equipment, Bitcoin mining related stuff, AI, HPC stuff. You guys, I doubt have any plans to get in on that side, but
I think more on the software side than
software
manufacturing side. Like, I don't know what your viewpoint is on like the Auradines of the world, but like to me, it's just way too much capital and way too much risk to compete.
Yeah, and it's really not. I mean, we like Auradine a lot. I like those guys a lot. We've had them on the show a few times. But yeah, that's a tough world to break into. They've actually done a pretty good job of it when you compare to some of the other folks that have tried in the past. But yeah, I mean, that's a tough area. And the software side, you guys have done really well too. But what about the WhatsMiner software? Do you guys have or firmware that you have for them yet? I think you had a really good
Looking at it.
You are? Okay.
Yeah. So we're evaluating all sorts of different stuff on the firmware side, but it's usually like, what drives that is where the demand's coming from.
Yeah.
And so, it's definitely something we're looking at.
Well, I don't want to derail.
Do you see with AI coming? Do you see more startup miners as we used to see, or is that number dwindled as everybody is flocking to AI?
That's a good question. I don't think it's come off. Like, just thinking anecdotally, like I don't really have hard numbers for you, but like we still talk to new miners all the time, and we are mid-tier miners that are expanding to new sites. But like, I think what I have seen is it's more of like call it like the 5 to 30 megawatt sites. Like you don't see too many new ones that are building 100 megawatts and more. It's like, but we are seeing a ton of like new sites that are maybe like 5 to 20 megawatts. Like there's a lot still being, deployed. And like we see it through the derivatives desk because a lot of people are like either, trying to expand their existing operation or building one from scratch. So we get a lot of inbound people looking for financing to build new mining sites. But I think the ones that are going to be successful going forward are the ones that have very cheap power, and that's not readily available either.
No, but I think that it's funny because 5 years ago, a 10 megawatt site was like pretty big deal, right? I locked down a 10 megawatt FEA, and that's pretty exciting. And then that kind of was like, oh, that's nothing. That's it's too small. People only want like 50, 60, 70, 100 megawatt sites. I have seen just in my business, my dealings, which is obviously a lot of just transactions on sites, man, the 5 to 20 megawatt sites, you can move a lot of them. right now.
Yeah.
And I'm also seeing the whole kind of a downward shift on the expectations of even some of the AI groups, right? Like change in scale or expectations on what they can get. I think it's a reality of the market, and just the lack of availability for large scale sites with what's going on with Encore and ERCOT and all that. It's hard to get anything available, 100 megawatts that could be energized in less than a year. It's really, really difficult to find
So
something like that.
are you saying that the larger ones are starting to like, because to me, like larger ones, the ones that we're talking to, historically we're like, we were only interested in like 50, 100 megawatts or above.
Right.
So are you saying that they're now like looking at smaller sites because the lack of availability of the larger sites?
I think so.
Yeah.
I've I've locked up 128 megawatts this year across 8 sites. And got more now for the start of the next quarter, of next year. But 8 sites, that's about a 16 megawatt average. And now, granted, I have not done any of those with AI groups, but I've had some that I reach out to that took my call now instead of just blowing me off. You know what I mean? Now they're small.
Yeah.
They're not big guys. But from the mining side, that's where I've had more groups that are traditionally would only look at like 50 plus are
Yeah.
very much looking at 10s and 15s and 20s. Totally. Absolutely. Like I can tell you that for sure.
That's because supply is dwindling. I mean,
Right.
the amount of those sites that exist are just absolutely being gobbled up.
Right. It's more about
so
the
you have
speed to get energized.
yeah.
Right.
Your Encore comment made me remember I got my Encore gift yesterday for Christmas, which
Oh,
made me
did you?
realize that I'd arrived in ERCOT when
Yeah,
you get
you
a gift.
sure did, man. I didn't know they give Christmas gifts. So yeah, you definitely
Yeah,
arrived.
I got chocolates. So it was
Oh,
nice.
nice.
Yeah.
Yeah, no, they never sent me nothing but bills. So that's good.
Oh, we get those too.
But yeah, man, the mining side has shifted a lot in as far as like what their expectations are, or brushing aside little 10 megawatt sites. It's like no, it's a lot different now, a lot different. And so
Yeah.
I welcome that. It's good for me. Those are transactable, right? They're not crazy
Yeah.
amount of money, and you can structure things to where you keep it. Same thing you guys do and try to reduce capital up front. Like there's things you can do on the acquisition side to make things transact easier and make things a little bit easier for the miner, especially in the environment we live in. But yeah, I mean, 8 sites that we can close and 128 megawatts worth. That's pretty good, and that it feels like 22 and 23 again. No, I'm sorry, 21 and 22 in regards to transacting on those type of ones. 23 was really tough. 24 was not ideal. I did get some done, but towards the end of 24 and coming into this year, yeah, the size of site expectation has dwindled tremendously or decreased tremendously.
Yeah.
So it's good. I like it. Yeah.
Taking a step back to, you were talking about how like 2 years ago, Chat GPT was very different than it was now. And it kind of sparked memory. When I was on your podcast like 2 years ago, I had Chat GPT write a fictional story about Jake Corley.
Oh,
remember?
that's right.
I'll have to pull it up again.
Yeah, we should. I forgot about that.
I should do the same prompt now and have him write the story and compare them side by side. But
Yeah.
I'm curious how.
Oh man,
That would
that'd be
probably be
great.
crazy.
Yeah, that would be crazy. You should do that.
I don't remember what the story was about. I was just like amazed because it was like monkeys discovering fire. We were like, oh my God, this is the coolest thing.
Yeah, well, we were also drinking Malort too, so
Yeah.
Oh man.
Extra.
Oh, dude, I was in Colorado and I was visiting my daughter, and I went on one of those like tours where they take you up in the Jeep. It was like in Ouray, and
oh, I love that area.
it's awesome, man. It's beautiful. It's incredible. I love that place. And in the building we went in, I mean, I know it's not really bathroom here, but the bathroom in there, that was like the coolest bathroom I've ever seen. But they had like Malort signs all in there. It made me think of you, man.
Oh,
Yeah.
I think you sent me a text of it.
I think I did.
Yeah. Yeah.
Yeah.
Be drinking Malort for Christmas.
Oh
I
man,
got
I'm
actually
sorry.
I got when I come to Houston next, Malort has kind of expanded beyond just that one drink that I brought to you guys. They now have
It's because of the podcast.
yeah,
Yep,
totally.
You're
It's
welcome,
got
Mr.
international
Malort.
fame now.
Yeah, but I think you guys will appreciate this one. They make a Malort bourbon. So I'll bring it's not good at all, but I'll bring
I was
it
going to
anyway.
say, does it taste as good
No.
as the
That's kind of
Malort
like
we
their
had?
brand, though. It's got to taste terrible, right?
No, it's bad. It's really bad. But I'm gonna bring it anyway.
Nice. I like it.
So broader market with like the derivatives desk, you know, obviously your remit has kind of like expanded now to where that's just kind of like one focus.
Yeah.
What are you guys looking at in terms of like the forward strip on like hash price in the context of like, are we entering into, you know, a bear market? Is it a bull market? Is it different like super cycle? I'm just kind of curious like how you guys are thinking about that from the derivative standpoint.
So you're asking, are we in a bear market of hash price?
Just a Bitcoin bear market generally.
All right, well, start with
There's a lot of like things are
There's a
not
nuance
behaving in the
there,
way that
right?
that we anticipated, right? And so I've just been watching a lot of videos on crazy theories of, I wouldn't even say crazy theories, I guess it just theories in general around, you know, Wall Street's involvement and some of the manipulation and just more of the institutional buy-in to where the cycles are not really behaving in the way that they have, you know, kind of historically. So I'm just kind of curious if it's a personal viewpoint or a viewpoint of Luxor of just kind of what is going on and maybe what the expectations are, you know, maybe over the next 6 to 12 months or whatever.
I will say, all right, I'm going to caveat like my Bitcoin comments here will be my own, not Luxor's. I can give Luxor based hash price comments. And I'll just kind of do them both, right? So like my personal take on the Bitcoin price action is one, like to your manipulation comment, like that occurs in every freaking market. Like as much as people want to deny it, like this isn't unusual. Two, like I actually think this is fairly normal for Bitcoin. I think getting a run up, making new highs, getting a washout, and then sitting in a range where everyone's crying about like how low it is. And, you know, you got one side that's saying it's going back down to 50 and another side saying it's going to be at 250K by the end of the year. Like this is happening so many times. This is normal, man. I've been in Bitcoin for like almost 10 years now. And so this shit's normal. What cracks me up is the people saying this isn't normal. It's like, how do you not remember like even 2 years ago? Like this is very similar. Yeah. You get a run up, you get all this irrational exuberance. Everyone's saying it's going to 1 million. And then there's this giant, you know, this isn't even the biggest drop off we had, not even close. Right. Yeah. And so like, and then it just sits there in this range. And I personally think we're going to be stuck in this, call it 75 to 95K range for a while. And then we'll break out, we'll make new highs and everyone's going to be all jazzed and happy again. And like, and then we'll rinse and repeat. So that's my personal take on Bitcoin. And like, I think the volatility is going to get muted over time because of institutional adoption, all the ETFs and all the DATs and all the stuff like, and then these will get smaller and smaller. And eventually like people will be crying because there's no volatility, but I think this is perfectly normal. I'm not worried at all. We're going to make new highs eventually. Just hang on. Everything's going to be fine. That's my take. As it pertains to hash price, very different answer. I think like, you know, hash price, if you look at a chart over time, is on a decline to zero, right? Like it's just, that's how it goes. If network difficulty is going up, this is going down. And, you know, it's just the way it is. And then you have the halving cycle and all that. If Bitcoin rallies, US dollar denominated hash price is going to rally. And I think we're at a point right now where we're pretty close to most people's break even. I can't remember what like the average break even is, but it's right around here. We're at like $37 hash price. And I'm thinking like the break even is probably right around 35 or somewhere around there, 30 maybe. If you go below 30, you're going to see a whole shitload of them turn off. And then, you know, like network difficulty is going to change and then hash price will go up and there's like an equilibrium there. You know, it's scary for everyone right now. Like, as we mentioned already, like you got high power prices and shitty hash price. But I personally think network hash rate is going to plateau. I think we will get an eventual rally in dollar Bitcoin. And everything will be fine again. Maybe not perfect, but we go through cycles like this all the time in mining.
Mm,
So I don't know. I guess what's unpredictable to me is what transaction fees are going to do in the future, because the volatility of that has been zero for a very long time now.
right,
And eventually that's going to have to play a bigger role in order for mining to be, have longevity.
right. Yeah. I again talking about Emory, but we're in a great position. I've thought about this even before we've seen kind of the hash price, uh, as crappy as it is right now. Like we really don't have any G&A out of it, and so like I was looking before here. We're still at taking our power price out. We're at like a 75% profit right now. We're in South Zone in ERCOT, which is great. It's about to be right now. Running an index, but we're still like 75% of our revenue as of today, or of our 24-hour revenue, was profit. Now it fluctuates between like 60 to 75. But even at the hash price right now, and we still have 4
That's
CPU.
amazing.
Yeah, yeah. And we're running hydro. But we're still at like, I literally looked before this, we were 75% profit. So um I mean, we're doing great. That's where I was talking about, like, I feel like the small and medium guys, if you do it right and you're just trying to like manage it, right? That instead of like, I see some of these public miners over the past, and they've had like 40% of their revenue going to like G&A bonuses and things like that. And it's absurd to think that you're going to be able to thrive in that kind of environment, or in this kind of environment, when you got that kind of like structure. But these small and medium sized groups, I almost feel like if you design it right, and you're not trying to live off of your mine, man, you're going to get a stack a bunch of Bitcoin here, and people start falling off the network before too long. Because I agree, I think that is probably the break even for most groups, but they also have a lot of expenses that you don't have to
Yeah.
have if you stay really, really disciplined and don't kind of try to live high on the hog off of a mining revenue. I don't. I feel like this is how it was designed to be, like old school way. Like this is how you mine. You have your day job, and then you mine and stack for the future. So I'm happy with where we're at right now, and I'm just waiting for, because like I think we're getting into the time where you can really start finding good opportunities to like scoop stuff up for the cheap, like really strategically position yourself for when we do see the next kind of ramps. And
I
that's what
actually,
made the 4-year cycles nice. But now it's kind of like, I don't know if that's the case anymore.
I love this comment actually a lot, because I remember back in 2022 or 2023, after like the horrific 2022,
Mm-hmm.
we saw, similar economics, probably worse, when we saw a bunch of people, capitulate, get washed out, you name it. And at the time I was saying, like, this is a good opportunity of learning for people that are going to be new to the space coming in. Is like, what you have to do is get your hash costs as low as possible.
Mm-hmm.
You start with that, right? Like, you come in, you have cheap power, and then you're judicious with your machine purchases, and you think about that for the future, right? Like, you try and get as efficient as possible, or machines that are going to last longer or appropriate for the environment you're in.
Mm-hmm.
And then you start, doing planning for the future. Like, maybe you get efficiencies from firmware, or, just talk my own game, like you hedge out some of your future revenue with hash rate derivatives or whatever. But like,
Right.
the point being is, people had the opportunity to look at the lessons learned from the past, build for the future, and run a very responsible mining operation. And I'm glad to see like you're one of those people doing that. And you're right. Like, I think there are people that, if they're starting from scratch, can learn those lessons and be very successful going forward. It's the people
Right.
that have like the huge OpEx and CapEx. And if you look at it like across the publicly traded mining companies, some of them are like this way below their
Dude.
break even right now.
Right. Right. They're
Um,
yes, they are way below it because of the way they structure stuff. And I'm not trying to rip on them. We like all those guys. We probably have most of
yeah,
them on the
same.
show at some point, but it's not feasible. And it's kind of, I mean, it, I think you could argue it's like, man, this is really detrimental for the shareholders when you structure things that way. But um I'm not trying to throw anybody under the
And
bus,
then,
but
let's play it out in the greater context, right? Like, so you're in that situation to where you were burdened by extremely heavy G&A, right? And so perhaps hash price is below your break even. And then you're feeling, especially if you're public, you're feeling investor pressure as you're seeing peers who are now diversifying into AI, something that is potentially,
right.
a lot more lucrative, assuming that you have the energy to be able to do that. And so, it's either we structurally change how we operate as a company, how we've always done things, which is really inconvenient and very uncomfortable, or we pivot into this new thing that everybody else is, and we hope that we're also rewarded in appreciation of the share price, which we've seen a lot of run-ups, a lot of run-downs, a lot of yo-yo kind of back and forth. So I think that's probably, a big part of it.
Mm-hmm.
Well, I mean, like, yeah, everything you're saying, like, a lot of that's just narrative based, though, right? Like,
Right.
there's been people that are saying, like, yeah, we're pivoting or diversifying, but not executing. And then there's people that are actually, like, the core scientifics out there that are actually executing on it. And I think you'll get a mixed bag of that. But some people are just doing it for the narrative to pump share price,
Right.
right? And like,
Right.
that's not going to last forever
No.
either. But
Yeah, you're right. I mean, HUD 8, I saw they landed a deal yesterday, I think. Was a fluid stack, I think. Actually, it's a pretty
that's
big
fluid
one.
stack.
Yeah.
I think
15-year deal, $7 billion TCV. So their effective colo rate is like $156 a kilowatt month.
yeah, I think
It's
out of
pretty
that, a lot of analysts have adjusted them to a buy rating too. So it's
Mhm.
good for them.
Yeah, no, that is good for him. But yeah, back to the running of mine, like despite like how ugly it is right now, and you're right, I think it was a little uglier back then. I not a ton though. I think we're pretty close to one of the ugliest times I've seen. But this is a time to me to where you can look to build, right? Is it
Totally. Yeah.
like this is the times that whenever blood's in the water, right? And this is when you find opportunities to grow. So I'm excited because I know we stayed really disciplined on like how we structured things and keeping our costs low and not trying to grow super fast. But I think some of that's probably because I get paranoid about that. I've lived through that stuff, and so it's like Jake, I remember you and I talking before. Like I was like, I will wait for the next time there's a downturn before I really go start trying to buy new machines and all this stuff because it's just this is when you get it cheap, man. The same machine that I would pay.
timing the cycle is very important.
Oh yeah, completely. And so, and we got 4CP rolling off this next one, so it's like, man, our profit margin actually, like, if we could see a little bump in price on Bitcoin side, and then we get rid of our 4CP charge, like, we'll be sitting pretty good. Which I'll have to talk to you about that, Matt. See what you tell me, because we met all of our 4CP kind of requirements this last one, so hopefully,
Nice work.
yeah. So we'll be, and at the time, but this is another one. At the time, and I feel like I'm trying to preach to people that are looking to get into space. Bitcoin was doing a lot better, and we had kind of a little bit of an internal debate about whether or not we should, try to curtail to hit all these 4CP targets because there was actually more calls this year. And I wanted to because I constantly am thinking about when we're in this price environment all the time. And it's like, man, sure, right now it's great. I feel like the whole mining space, you always have to be thinking about these times though, always. Whenever you're doing anything, you always got to be thinking about, yeah, that's cool, but if this happens, because this will happen. I've known people that are like, this is back in 2021. Oh yeah, the 4-year cycle stuff is over. We're never going to see this. And I'm like, what are you talking about, dude?
I heard that months ago, man.
Right? You're like, what? This is crazy. Yeah. And I don't know if it's having worked you worked in the market, so like you understand that. I worked in oil and gas. Jake worked in oil and gas. We know this. Cycles come and go. That it happens. Like they are real, and I don't think they'll ever go away. I agree. I think the volatility in Bitcoin just over time is going to shrink. It has to, because the numbers to move a market that continues to grow. I mean, you're not going to see the same level of ups and downs, I think, but or the speed of it maybe. But But yeah, the cycles though will be here. That'll never go away, I don't think. So,
No, it's,
um,
I mean, Bitcoin's a commodity. And I don't know if you
mhm.
knew this, but I started my career as a Henry Hub trader.
Oh,
So
I
like,
didn't know that. You
yeah,
did. Okay.
yeah. So like, I've traded a lot of different commodity markets. Yeah, the cycles are real. Like they happen.
Mm,
And like, some are seasonal, some are driven by, macroeconomics. Like
mm.
markets go up and down,
Right.
sometimes violently.
Right.
But to your point, like if you're setting up an operation in a business, you got to be prepared as your baseline for the worst of times. And then
Right.
everything else is gravy.
Right. Yep. And I think there's a lot of the small guys that get in, like that are just starting. I don't know. I'm hoping that people I feel like over the long term, there's going to be a lot more small to mid-sized guys that are making up a bigger chunk of the hash rate than what there is right now. I think right now you got the big guys make up such a huge portion of the hash rate, but I think over time it's going to be more people that have 10, 20, 30 megawatts or less that are spread out a lot more places making up more of the hash rate. And
Do you
that's just a
do you think that
guess.
we don't see these big miners anymore, or do you think we don't see a lot of hash rate on one location, like these giga sites, like out in like Wrights, Rockdale stuff?
What do you think, Matt? I have my thought, but what do you think?
I mean, first of all, I agree with you to some extent. I think you will see a lot more diversification on, like medium-sized sites and maybe like more off-grid as well.
Mhm.
Um, I'm of the opinion you'll probably see like consolidation of some of the bigger ones. So like you probably have less bigger ones, but very big ones.
Mhm.
Um, but I like your world better. I'd like to see, a lot more hash rate come from, a lot more sites.
Mhm.
I think, personally, I think the mega sites are going to go to AI, HPC, and I
I do
think it'll be
too.
hard for them to come back to Bitcoin mining ever.
Right. I totally agree on that. That's why yeah, 100%. And I think there will be consolidation, but I think even in those, because I do think the AI stuff is real, and while I don't think it's feasible, I don't think it's feasible because of the infrastructure on the grid and electrical side. But the ones that exist now that already are 700 megawatts, whatever, 500 megawatts, like they're going to go AI. I don't see why they wouldn't. And
No, I
I
mean, the space evolves to where you can, share rack space between HPC and Bitcoin mining,
yeah.
and then maybe, but
Well, I think they're going to they're going to have some level of flexible load if they're on grid, because like what Texas did with SB6, like I think that's going to be basically a
yeah,
model across the country.
yeah.
Because you can't have people taking that much power and not contributing something to the grid because of weather events. God forbid some terroristic event. You know what I mean? Like there's a lot of things that can impact why you need power to go to the residential and commercial businesses, and having these large scale, I mean, monstrous sites that are eating up that amount of power on a constant basis. It is not feasible.
Oh
And
no,
I
you're gonna blow grid stability through
right.
the roof.
And
Yeah,
that's something that it doesn't, electricity is electricity, right? And I know AGI could happen, but like, unless there's something about physics, which there could be, that we clearly haven't understood to this point, the electrical system works the way it does because that's how electricity works, right? And so, like, it is what it is. And so, I just think you're going to have people that contribute to the grid. And so, that's the role Bitcoin's going to be playing, because from a flexible standpoint and fitting in the infrastructure style of what a data center would have, there is nothing that compares to it.
yeah.
There's not even a reason to try to improve on it. Now, they might not be upgrading machines. It might be used literally for a battery. You know what I mean? Like up and down, load management only.
Yep.
And you're not necessarily doing it for the economics of the mining. So you're not upgrading to like the nicest, newest machines, but you're using machines that functionally put you on and take you offline in a reasonable fashion. But so there's a role for mining at those big places, but man, I don't see how mining, because of what you were saying, right? The hash rate or hash price constantly going down. it's not going to make sense for them to be doing that when you compare to the revenues that they can make on the AI side. And I don't see that being the same race to zero, because it's growing in industry and it's eating the industry, right? It's eating all industries eventually. So
Yeah. On the flip side, I'm not convinced that the margins are as high as everyone's projecting them to be in AI HPC. And I think you'll see some reckoning over the next 2 years, but probably not to the extent that would flip the
compete.
switch to go. Yeah.
Right. I agree. It'll come down. That's part of the
Yeah.
bubble stuff, right? Is like,
Yeah.
you're paying freaking absurd numbers on a per kilowatt hour basis right now, but it'll level. I mean, shoot, if you're paying 200, 300, what'd you say? 156 was the number for HUD 8, Jake? Is that
156 a kilowatt month?
a kilowatt a month? Okay. But if say on average you're doing $200 a kilowatt hour, or a megawatt hour, well, shoot, that's way better than Bitcoin mining. I mean, it's not even close. So
That's
I mean,
that's a low number, by the way.
yeah, that's a low number. So say you get down to, 100, that's still dwarfing Bitcoin mining.
Yeah.
So
No,
I will say this is as a kind of counter to what you'd said, Matt, is that especially with our project and kind of getting deeper in the data center AI side and having to understand the economics, while the economics of owning GPUs makes a lot of sense, you don't have a ton of flexibility for those economics to change downward, because you can't justify the infrastructure investment to build it. Because like just on a colo, your average payback is going to be 7 years if you're not owning the GPUs. You're just doing a colo like lease rate. Those are already like kind of tight, like infrastructure style IRRs.
Okay.
It changes if you own the GPUs, but your CapEx doubles. And so they kind of have to figure out ways, once again, kind of stemming back to their business model to where it's more lucrative, to where they can continue to pay for that. Because nobody, if the economics shift downward a little bit, nobody's paying the infrastructure cost to be able to build all of this stuff.
I think over time,
I
though,
agree with you, actually. I think your point is valid, but like just trusting people to figure out ways to.
right.
I know. That's the hard part, right?
Yeah.
Well, and I think competitively over time, like if when people are making that much money, it's just like drilling new wells, right? Like when you're making $120 a barrel for oil, well, all of a sudden a lot more people get into that area and they want to drill more wells because the margins are this, and then over time, like it gets driven down. People got to drive costs. Like anytime,
Well, yeah,
you're making
the name
a lot,
of the game is going to be efficiency.
more people, right, and so you're going to have more people flood in,
Same
and
with,
like, well, I'll do it
Shell,
for this price.
Same with Bitcoin, same with AI. As you're seeing power density of these racks, increase, and therefore the overall like footprint of these sites is shrinking.
Yeah.
Right. And so, but obviously, there's still Jevons paradox, right? So it doesn't necessarily mean they build less. They usually probably just build more, but you can just squeeze a lot more into a lot smaller package.
Right.
But to your point, no one is factoring in margin compression. In fact, they're like, they're doing the opposite. Like in these investment decks and raising money, they're projecting higher margins than they're making now by magnitudes. And so,
that's weird. I didn't know that. That's what's going on.
Well, I mean, that's normal when you're when you're raising money and you're talking to investors, you're going to inflate your projections. But I don't know, like the two, there's going to be some sort of reckoning at some point. But when that happens, or I guess even if it happens, who knows?
Nah, it's going to happen, dude. It's inevitable. Like and that's just not because I'm like a smart guy, but that's just what happens. That's like the nature of the world is people get excited, they get frothy, and they throw money at stuff, and then it falls out from underneath them. And then the good stuff, the best stuff kind of takes its spot. It's just cycles. So I'm sure it'll happen. I don't know when. If I knew when, I wouldn't miss these windfalls all the time. So
like I
think focusing on the mining side, if I kind of had my crystal ball, if all cheap power is being sucked up by AI on grid, right? And now even AI is having to look off grid. Bitcoin mining especially kind of has to look off grid. And so then if you want low cost of power, who is in the most unique position to be able to actually execute on that? It's oil and gas companies who have stranded or disadvantaged gas in certain regions.
International opportunities.
Yeah,
Like,
international opportunities as well, but especially here in the U.S., and that tide is changing. And I think that the intellectual exercise that a lot of these groups are going to do is that they are feeling a lot of pressure from some of their peers and from investors to take a look at whether it's just power, whether it's power for AI or power for Bitcoin mining. I think a lot of realizing that selling power back to the grid in most locations is not near as lucrative just because of the cost of producing the power in the first place is a very, very slim margin game. And I think that hasn't worked out for them very well. So then they look at AI, and hyperscalers don't want to build power plants. Neither do most of the E&Ps from the conversations that we've had. But let's assume that they did. And I think that there's so many requirements on the AI side. It is so complex. And you're dealing with people from Silicon Valley who typically don't have energy experience. And then the inverse of that, people from the oil and gas experience that don't have any experience on the technology side. And it's like people speaking totally different languages when you get them in a room together to try to even get a deal done, right? Let's assume they get a deal done. Then we get to the actual like technical aspects of this. And it's so much more complicated to build stuff for AI than it is for Bitcoin mining. And so I think they go down that path intellectually. And then if they have some sort of commitment that they're going to do power to something, and they have their own disadvantaged or stranded gas that, maybe it's Waha and they're not getting paid hardly anything for it. They're like, well, we can just do the Bitcoin mining. Like, is it as lucrative? No, in most cases. However, it's significantly easier. I don't need to run fiber lines. I can run it on Starlink. I don't need to go and find customers. The network is able to monetize itself. I can containerize it. I don't need to build, massive actual data centers with like 2-in redundancy and all of the CapEx associated with it. I think all of a sudden Bitcoin mining off grid becomes very attractive for these kinds of companies. And I think the tide is, while they are slow and resistant to change kind of culturally, I'm seeing the tide change. It's been changing, and it's maybe not changing as fast as we would like it to change, but it is changing because these conversations are happening in boardrooms across the U.S. at all of these energy companies.
Well,
I mean, I love that narrative. I think, mining off grid is not without its own unique set of challenges. But you're right. Like,
it has its own challenges for sure.
But the barrier to entry is so much smaller. To your point, and I think you're right. Like, you're already seeing some companies be successful at this, and I think what it takes is people. I think you have to start with the people that understand, the stranded gas, stranded oil space, and then marry them with someone that understands Bitcoin mining operations, and you put those two together, and I think it's a recipe for success. I think if you just take a Bitcoin miner and say, hey, go find stranded gas or stranded oil and go build a
and I think that's where a lot of off grid companies or projects, whatever you want to call them, have kind of gotten a little bit of a bad rap. I think it's people who predominantly didn't come from the industry, who are Bitcoin miners, who wanted to go into energy and go into power gen and had to learn a lot of really hard and expensive lessons, and therefore left them jaded, and they just said, fuck this, let's go like on grid, right? Because it is significantly easier. But however, if that is the world that you live in, it's and it's not as complex as people think. And there was a few Achilles heels with most of the off-grid projects in the early days, particularly building at a well site.
Yeah.
Anybody will tell you if you got commingled wells in a single gathering point, one well goes down. Let's just say you got 3 wells there. There's 33% of your power goes down, and you have people who don't know how to maintain generators or turbines and the load profiles that you need to put on them to ensure reliability and uptime. There's so many different things that could go wrong where people are just like, let's just throw a generator out there and just like plug Bitcoin money in. It's like, in theory, but in execution, it's so much more complicated than that. But that's something that is native to the oil and gas industry. We have to have power for drilling rigs and for frac fleets and for operations and just for like the daily wells. Like it's just kind of part of the game. And so I feel like you would have a lot of success with those kinds of groups getting into it. I think the challenge there is it's the Bitcoin component, right?
Yeah.
Where a lot of these guys don't want to go in and try to sell a board on Bitcoin mining when they don't understand Bitcoin itself, maybe forwards and backwards. And I think it's a little bit of perhaps an insecurity. Though I will say that more people are more educated today than they were even a few years ago.
I agree with
Speaking
everything you
of,
just said.
I got to wrap up. I got to meet with an oil and gas company right now about a Bitcoin mining deal. Yeah, I got a little 30-minute drive I got to
Prophetic.
get on. Yeah. What a tee up, man. Matt, I hate to cut you off, man. I gotta hop, but I love having you on, man. You're one of my favorite people, not just in the Bitcoin space, but just in general. So thank you
I
for
appreciate
coming
that, man. I
on.
love you guys too.
Yeah. We always love having you, man. And you have an open invite, and anybody from Luxor, shoot, they got an open invite. We'd love to have you guys on, and just appreciate the
Next time we all get in a
dude.
room, just Malort all around.
Yeah, man.
I don't even drink anymore, but I'll make an exception for you and some Malort. So
maybe they make Malort NA. I'll have to find out.
Oh, man.
that just sounds like
That
rubbing
would
alcohol.
sell so terrible.
It's like,
hey, how about some Malort that doesn't even have any alcohol in it?
It's all pain, no gain.
Yeah. Oh, man. That's awesome. Well, thank you, Matt. Appreciate it, bro.
All right, brothers. Good to see you again.
All right. We'll see you
Later.
soon.
See ya.